in our series Deep Dive, we look at Ujjivan Small Finance Bank. The stock is down almost 40% in the last 1 year. Asset quality is on the downward slope as well. Hiral has looked at this very closely and she joins in to talk more about this. Hiral, good morning. Is it, of course, is it a Ujjivan specific phenomenon, or a lot of these banks are going through this? And of course, what's gone wrong with Ujjivan?
Absolutely. So, Neeraj, you're correct. It's not only with Ujjivan, it's with a lot of these banks which are facing challenges specifically with microfinancing. And that's the reason why we're seeing these kind of concerns. But let's quickly look at what's happened with Ujjivan Finance. 40% is the kind of downtick that we've seen in the last 1 year. So a major knockoff that's happened in terms of the share price. Now, let's understand the key factors which are not working. Firstly, it's actually disappointed investors in 2021 as well, where the bank itself was on the verge of collapse. So that was one of the concerns that we've been looking at that point in time. But from there, it started the upward journey once again. There has been deterioration in terms of the asset quality. Moving from there on, if you see in terms of the loan growth, that has started to slow over the last couple of quarters. Microfinance, as mentioned, has been one of the key challenges that not only Ujjivan Small Finance Bank is facing, but the industry as a whole. This is a grappling issue. Moving on, they are absolutely pretty much mixed between secured and unsecured, and there's no clarity that's coming in for Ujjivan Finance, and that could be one of the downers for the bank. And lastly, from a valuation perspective, if you go to see, it is not expensive. However, whether there will be further correction on the cards, taking into consideration the downward journey, that is a key question. So whether you should be entering or buying the stock on the back of a valuation is a big question mark here. But let's move on to the asset quality deterioration. From 7.1% in FY22, it's actually gone down to 2.1%. But from there, if you see, it started to again rise up from 2.3% and 2.5% in the second quarter. Moving on, the loan growth, that has started to slow down in the last 2 quarters. In the first quarter, 19% and then 14%. Initially, it was in that range of 27 to 30% as well. The slippages have gone up for the bank. So from a 113 crore number in the second quarter of FY24, now it's gone to almost 243 crores, right? So the slippages have doubled for the bank, and due to which, if you see, the provisioning has gone up, and that has impacted the capital adequacy ratio. If you see the provisioning from 581 crores, it's gone up to 623 crores in the last quarter, and the capital adequacy ratio has declined from 25.19 to a 23.38. Lastly, if you talk about the microfinance business that we've been talking about, that's a key challenge because that has continued to face issues on the recovery end as well. Now, the management has said that they're expecting a business revival only from the fourth quarter of FY25. But if that really happens or not is what we need to wait and watch and see. The disbursements have been lower, and this is because the management has now started saying that they will have a cautious disbursement strategy. And the norms for NTC customers that have become stringent. So all of this is actually putting them under locks as well. Now, if you talk about the loan book, they're actually moving towards a secured loan book where it was at around 34.9% in the last quarter. It's moved up from a 31.3%. They're moving towards a ratio of around 40% that would come in from the secured book. Overall, if you go to see, the management is actually confident about growth in the secured portfolio as well, but it's with a contingent whether they are able to perform. Now, if you talk about the profitability, that has been taking a beating. It was loss-making in FY22, but it turned profitable. Now, if you do annualize for FY25, they will not be able to meet FY24 numbers as well. The net interest margins have been pretty volatile. Return on asset and return on equity, that has been dwindling as well for the bank. Moving from there on, the key questions from here is, what is next for Ujjivan? First, you have to watch out for the stress in the microfinance segment, not only for Ujjivan Small Finance Bank, but for the industry as a whole too. The customers, the new customer acquisition in problematic clusters, that is what they have put on hold as well. I mean, they've been absolutely stringent on that front. On number 3, if you go to see the loan growth in the group loan portfolio, that is going to be key as well, because that is dwindling. But when do they see the recovery back to that 27 to 30% mark is going to be absolutely important. The over-lending issues in certain states is what is causing all of these troubles. So that is one area that you have to watch out for. Valuations, as we mentioned, are not very expensive. However, the concern will be to decide the extent of the impact on the stock price, because taking the kind of mixture they're looking at, secured and unsecured, that is going to be slightly troublesome. There is no clarity that is emerging out of that. So a lot of questions that come up over here is whether a low valuation warrants a buy, or a low valuation right now for a Ujjivan Small Finance Bank is actually telling you the story that there could be a downward journey further from here on.